Hey guys, thanks for coming. If you haven't seen my videos or been to my channel before, I like to talk about personal finance, investing, and lifestyle tips. Before I get this video started, please subscribe, like, drop a comment, hit that bell, and stay tuned. I got a great episode ahead. That being said, let's get into it. In this video, I'd like to talk about why certain brokerages such as Robinhood restricted trading on many securities. So Robinhood and other brokers limited trading on assets such as Gamestop and AMC because of increased volatility. And taking a step out and looking at it, it looks really bad from our perspective as retail investors. It seems like we've been stripped of our right to a free market, and we weren't able to capitalize on certain stocks. So it does look bad from that perspective. If you're unfamiliar about what happened last week, basically Redditors on this thread called Wall Street Bets banded together to fight against hedge funds who had massive short positions on companies such as GameStop and AMC. If you're unfamiliar with short selling, please refer back to my options video where I briefly talk about options and short selling. That being said, in brief, shorting is where an investor borrows a stock from a broker, immediately sells it, pockets the money, holds on to that money until the stock drops price. They repurchase that stock and then give it back to the broker, and then they keep the difference. So Redditors joined together and with retail investors, and they wanted to pump up the price of the stock to drive these hedge funds into bankruptcy. The massive flood of investors purchasing assets such as GameStop and AMC led to massive losses in these hedge funds, as hedge funds try to recover some of their money by selling out their positions, which is basically called a short squeeze, which ended up driving up the price of said stocks even higher. Now that I kind of went into detail about what has been happening, now I'd like to talk about reactions from brokerages such as Robinhood. Robinhood, a company focused on investments for the average investor, the average person, going after the rich and giving to the poor, like the story of Robinhood. But Robinhood limited trading for the average investor last week, and it was under huge scrutiny from politicians and investors alike. It really seemed like they were out to save hedge funds. They were really out to limit our market power, limit the amount of trading that we can do. So why did they do it? Why did they go against their image, their brand? A company that makes money off of the amount of trades that we investors make. Why did they do it? Well, in order to answer that question, I want to first talk about what happens behind the scenes when an investor places a trade through a broker such as Robinhood. When an average investor places a trade through a broker such as Robinhood, that trade is transferred over to an exchange. The exchange is where the buyer meets the seller. When those two match and a price is agreed upon, it is then transferred over to a clearinghouse, and this place, one of which is called DTCC, Depository Trust Clearing Corporation. And this is where it sits for 2 days before the trade is finalized and recorded and the transfer of ownership is made official. However, during this time, our brokers make that trade official once it goes to the DTCC. Our brokers, such as Robinhood, have to pay a fee plus collateral on that particular trade. So the fee is the profit that the DTCC is going to make because they're processing the transaction. Collateral is to make sure that the asset is accounted for if the broker is to not come through with their deal or whatnot. So that collateral is to ensure that the transaction goes through, because the DTCC always puts through the transactions. With more volatile stocks, the collateral is going to be increased. The DTCC wants more collateral to protect themselves against changing stock prices, because in 2 days, a lot can happen. Usually the collateral is lower for low volatile stocks such as Apple, but GameStop, very volatile at the moment with all the retail investors and the hedge funds selling their positions. So the price was really driving through the roof. So the DTCC or the clearinghouses required more collateral. So Robinhood had to pay a higher upfront collateral per transaction to cover the DTCC if the GameStop price, went up another $100, $200, $300. This is not even including, if an investor pays on margin, which is going to be more money up front from the broker. So with that explained, that kind of gets me into the point of why Robinhood stopped or halted trading on assets such as Gamestop, AMC, BlackBerry. So as I explained earlier, the stock became highly volatile as Reddit investors were putting more money into the stocks, pumping it higher and higher, and while hedge funds were selling off their positions, driving the price even higher. So each trade of GameStop and AMC put through by an investor had to be covered with more collateral by the brokers because the stock was changing price so drastically that the DTCC wanted more money to cover their backs. AMC and GameStop, most of the trades were put on margin. So Robinhood is paying the margin up front, they're paying a fee, and they're paying a higher collateral because it is a volatile stock. That being said, Robinhood had to have extensive amounts of cash to cover all these trades by the crazy trading volume that was seen in last week. That being said, they halted to increase their cash. So they once they secured a loan of about $1 billion, they started increasing trading and allowing more investors to put money into it. Overall, with the increased volatility and volume, brokers such as Robinhood had to pay higher collateral to cover these transactions, and they didn't have enough cash on hand for all these transactions because of the high volume. So they had to halt trading for retail investors like you and I. I hope that Robinhood and other brokers learn from this event and they stock up on more cash so they can complete enough transactions and not going to have to stop trading for retail investors like you and I. We should be able to capitalize on market fluctuations like last week without any restrictions. That is what a free market is supposed to be. So I hope they fix that in the future. So in conclusion, from our end as retail investors, it really stinks to see something like this happen. It kind of seemed like they were really stopping us from going against these hedge funds, which was unfortunate. But I think it's important to understand that there are other reasons why I don't think Robinhood was necessarily out to get people. Hey guys, thank you so much for sticking to the end. Please hit that subscribe button, like, the bell, and leave any comments. I really appreciate it. Stay tuned, and I'll have more videos coming soon. Thank you.